Next up, we have Savannah Resources. Savannah is an AIM-listed lithium explorer and developer with 2 development stage projects, Mina de Barrosa, a hard rock lithium project in Portugal, which is the largest spodumene lithium resource in Europe, and the world-class Mutamba heavy mineral sands project in Mozambique, which is being developed in a consortium with the global major Rio Tinto. Today's SAV market cap that sits at 62 million. And tonight we're delighted to welcome David Archer, CEO at Savannah Resources. Over to you, David.
Thank you so much, Donald. I'm very delighted and honoured to be on the call tonight, and I'd like to introduce you to Savannah and our Mina de Barrosa lithium project in northeast Portugal. We believe the project really will be the raw materials sort of centrepiece for Europe's energy transition. Looking at sort of the company from a higher level, it is the largest sort of conventional spodumene lithium project in Europe. It means that in terms of development risk, that's very much sort of moderated because of the sort of long track record of sort of successful development of hard rock spodumene deposits, particularly in Australia, which is now sort of the largest global producer of lithium raw materials. We're in Europe, which is a great thing because Europe really can be the sort of leading sort of global producer of electric vehicles. So there's a very sort of natural market for the lithium raw materials that we'll be producing. We hope to be in production fully in 2023, means relatively early cash flow, and we believe that we enjoy essentially an early mover advantage, and we could be the sort of first significant producer of lithium raw materials in Europe. And of course, you know, there's very much sort of surging demand, as we've sort of seen. In 2020, there were just over 1 million electric vehicle sales in Europe. That will probably go up to about 7 to 8 million electric vehicles in Europe by 2025. So that's going to be a very major increase. VW, for example, is producing around about 1,600 EVs per day, and that will be sort of close to 600,000 units over the year. So, you know, very significant. We're also sort of seeing a major build out in gigafactories. There are something like 30 individual gigafactories either in operation, in construction, or slated for development. And of course, you know, one of the key things that I'll talk about a little bit later is that all of this is anchored via an offtake and project level investment with Galp, which is a European energy major and the second largest Portuguese listed company. Just in terms of the executive team, and you know, I think for a junior company, I think we've really got a great team of industry professionals. I've been involved in the successful development of at least 3 large publicly listed companies, 2 in the resources space, 1 in the oil and gas space, and a 4th one in the telecommunications sector. I'm supported by Dale Ferguson, who's I believe, you know, one of the leading industry executives, and he and I have been working in close cooperation since 2003. We have Michael McGarty, our CFO, a very sort of good group of in-country professionals, both in Portugal and Mozambique, where we also have a very exciting mineral sands project, and ably led by Asa Bridle on the business development side. Just looking at the company itself, we're headquartered in London, where I'm based. We've been incorporated since 2010, and what we're really doing is looking to sort of focus on Mina de Barrosa, which we sort of believe holds, you know, great current sort of potential, and of course, you know, Portugal itself, you know, we believe has sort of very significant exploration potential. We're certainly very well placed to play a leading role in defining sort of further resources in Portugal, particularly on the back of the international lithium tender that the Portuguese government will announce or will action later this year. We've got a 27 million tonne resource. We started off with a 0 million tonne resource when we secured the project in 2017. It's been one of the fastest resource drill outs, I think, that's been seen in Europe in recent decades. And it's very much a conventional mine development, relatively small in mining industry terms, but significant in terms of the strategic importance of the spodumene lithium that we'll actually be producing. I mentioned the arrangement with Galp, and really what we've sort of seen over the last 6 to 9 months is an extraordinary growth in investment interest in lithium, and particularly in projects in Europe, which sort of is the key sort of jurisdiction, key geography for lithium demand. And as I mentioned, we've got plenty of exploration potential, both on some of our exploration license applications and sort of more broadly within the Iberian Peninsula. We have a market cap at the moment of about 60 million pounds. That sort of compares very favourably with the scoping study NPV, which showed a 365 million before tax NPV, based on a relatively conservative spodumene lithium price of about $685 a tonne. The international price is now $700 a tonne, and we think that provides a very sort of solid base for a mine development decision. The capital expenditure is relatively modest at about $109 million, so very achievable. Just talking a little bit about Europe, and really the imperatives here are very sort of key. The European Commission wants to protect and allow the European car industry to make a successful transition into electric vehicle production. So clearly, the European Commission and the citizenry of Europe would like also to see meaningful progress in terms of meeting CO2 targets. This move to electric mobility will be sort of key to that. And of course, the sustainability and resilience aspects of having European production is also very key as well. So European Commission wants to really sort of see an end-to-end lithium value chain developed in Europe, as you see at the bottom of this slide. And we can sort of really provide perhaps the sort of initial sort of core of sort of production to sort of fill out the raw material productions end of things, and also sort of to provide the raw material feed that might be able to underwrite the development of a new refining or mineral conversion industry here in Europe, whether that's in the Iberian Peninsula or potentially in Germany, Poland, and Finland. And really, Europe wants to be independent. China is, very much the centerpiece of lithium product development, and Europe really wants to play a major role itself. We've been looking at lithium really since 2016. Initially had a look in Finland. We decided that Portugal was the preferred jurisdiction, and we've certainly been proved right on that. Our glint in the eye is now sort of being turned into one of Europe's most significant lithium resource developments. We've been moving forward very quickly with our development path. We've completed a scoping study. We've acquired the balance of the ownership of the project. We lodged an EIA at the end of May of last year, and we announced an offtake deal with Galp in January of this year, and we're now moving through the EIA approval process, and we will sort of shortly sort of conclude the sort of public consultation process, which has been underway for the last few weeks. ESG is really a key element in any mine development, whether it's Kenya, Tanzania, or Portugal. And of course, we've been putting an enormous amount of effort into this. Our EIA has demonstrated this commitment. It's 6,000 pages long. It illustrates 238 individual programs and management and initiatives that will help to manage, eliminate or mitigate any environmental and social impacts. We will be investing something of the order of 15 million euros in terms of initiatives to minimise impacts. We will be undertaking progressive rehabilitation, and we'll be introducing a number of very innovative and industry-leading initiatives, including real-time monitoring of our environmental KPIs and sort of releasing that to community and stakeholders via an app. We're also looking at some very leading social programs. We've designed a benefit sharing program which will help fund worthy social and environmental sort of programs for our community and for our region. And of course will be a major job creator and a major income generator for the local municipality, which can sort of feed further revenues back into worthy initiatives. Of course, we're listed on the London Stock Exchange. Governance aspects are very sort of key, and also sort of a key element in terms of people like Daimler-Benz. When they buy lithium-ion batteries, they want to know that the lithium has been sort of produced sustainably and from reliable sources, from jurisdictions with excellent environmental, labour and sort of general governance sort of frameworks. And we'll be introducing an industry-leading environmental social management system, which will sort of comprehensively manage the ESG aspects of the project. Green power will be very important, and we'll be feeding the plant with electricity generated from the abundant renewable resources in northern Portugal, wind, hydro and certainly solar. We'll be looking to transition the diesel fleet from diesel into sort of renewable powered fleet, possibly electric, possibly hydrogen. And what we'll be able to produce is effectively a premium carbon neutral spodumene hard rock sort of concentrate that will be highly sought after by European sort of consumers of the material. Just briefly on some of the economics, we enjoy outstanding economics. Our C1 cash cost is around about $271 a tonne. You might ask, why is this so? Fortunately, Portugal is a low-cost jurisdiction. Labour rates are a fraction of the labour rates in Australia, our key competitor. We enjoy the production of co-products, both quartz and feldspar, which have a very sort of buoyant and significant market in both sort of Portugal and Spain. If you've ever been to Portugal and Spain, you probably will have noticed the ceramic tiles, which are pretty much everywhere. The geometry of the deposit helps as well. It's tabular, near surface, and enjoys a very low stripping ratio. And finally, we won't be shipping the material to China. We'll be shipping it hopefully to a refinery in northern Portugal, or sort of potentially to northern European ports. So a significantly smaller sort of transportation cost associated with the mine development. Just sort of talking about some of the key elements, we'll be producing a 6% spodumene lithium product. That's very much sort of the global lithium standard. We're certainly in the money in terms of our sort of projected revenue for the mine development. And really the mine development sort of shows some really attractive investment metrics, which has an NPV post-tax of $250 million US, and that was based on a much smaller resource than we currently have. It was based on a 14 million tonne resource, not a 27 million tonne resource. So I think you can look forward to that NPV moving up. Shows, you know, really attractive IRR numbers, quick paybacks, which means that mine development financing will be relatively easier to secure. Originally a mine life of 11 years, I think we'll be sort of pushing out past 20 years. This is going to be a long-term reliable supply of spodumene lithium for the European market. Just so you just have a little bit of a look at the mine itself. It's important to remember that this is a granted mining lease. It's got a 30-year term, runs through to 2036. We're already mining there at the moment, and we're producing sort of quartz and feldspar. So our EIA is really looking to expand our production scope, put in value-added processing, and essentially this is in many ways a brownfield site development. This is certainly not a greenfield site development, and you can sort of see the quarrying that's going on the projects at the moment. This shows the resource in terms of how it's grown. As I mentioned, it's grown from a 0 tonne resource in 2017 through to 27 million tonnes today, and we're sort of guiding to there being sort of ultimately something in the order of a 50 million tonne resource, as you can see from this final bar in the bar chart. It's high quality spodumene. It's got very low iron. That's one of sort of the key contaminants. So it's globally one of the lowest iron spodumene lithiums in the world. Otherwise has very low levels of contaminants, a very saleable, clean spodumene lithium concentrate. This is a little bit of a mud map of how the mine development might look. We're looking at a sequential pit development over 4 pits over the life of the mine. The principal one here being Grandau, which has something of the order of 50% of the overall resource. We'll be using conventional drilling, drill and blast, crush and grind, and using, you know, what is now a relatively well proven and sort of conventional processing circuit that's sort of been stress tested in a number of mines in Australia to produce around about 200,000 tonnes of spodumene concentrate per annum, which, you know, would be able to, which is equivalent to something of the order of 5% of Europe's requirement in 2030. Just briefly on Galp, this was a deal we announced on the 12th of January. Galp is making a very determined transition from its oil and gas business into the energy transition. They're actually sort of the largest solar producer on the Iberian Peninsula. They'll be investing 6.4 million to secure a 10% shareholding in the project at the project level. They'll be taking something of the order of 100,000 tonnes of spodumene concentrate, which is about 50% of our sort of projected production. And of course, you know, it's great having a partner like Galp, being a very well regarded corporate citizen in Portugal itself. This slide is really pretty key because I think it sort of really highlights you know, the appealing geography that we sort of sit in. Abundant renewable power, that's really important to consumers of the lithium, that it's got a low CO2 footprint. Only about 140 kilometres from the port of Leixões, which is the second largest port in Portugal. Certainly potential for a refinery, for example, to be sort of constructed in northern Portugal, using our material as the baseload sort of feedstock. And of course, being on the coast gives us access to northern European ports, where there are a number of sort of mooted lithium conversion plants being planned to be developed. So this sort of really outlines some of our achievements to date. 2021 will be a continuing sort of busy year for us, both in terms of all going well, receiving our EIA approval. That's really on a very sort of solid pathway at the moment. We'll be looking to complete our definitive feasibility study. We'll probably be sort of expanding our exploration activities both within Portugal and Spain, and then sort of move into final investment decision next year, financing mine construction and full scale production in 2023. Just quickly on the investment case, conscious of time moving by, but we will be a significant producer of lithium carbonate equivalent, the second largest in Europe. We've got a very modest market cap in comparison to our European peers, and we have a superior IRR. So I think those three slides pretty much sort of summarise the investment appeal of our company. So in summary, it's a rapidly growing market in Europe at the moment. Demand is increasing at a fantastic pace, and Europe is likely to be the second largest, if not the largest, lithium battery manufacturing centre sort of globally. We believe Mina de Barrosa is the right project at the right time in the right geography. It's got short latency. It can play a meaningful role in terms of providing some degree of lithium independence for Europe. Importantly, it has a low carbon footprint. We'll be using renewable power. We'll be looking to layer in a non-diesel powered fleet. We think we've got very attractive investment fundamentals in comparison to our industry peers. We're seeing enormous demand from various groups looking to sort of secure the balance of our non-GALP committed production. So I think we could probably sort of sell our full production a number of times over, and it's going to be a news-packed balance to 2021, and we'll be achieving major milestones in 2022 and 2023. And we believe Savannah will lead the way with Mina de Barrosa providing sort of a vital strategic foundation to Europe's energy transition. So that's it in summary.
Okay, David, you've earmarked 2022, 2023 as being busy years. What about the next 6 months? What's the news flow you expect in the next 6 months?
I suppose, well, let's say to the end of the year, so I don't tax my mental arithmetic. You're
allowed to the end of the year.
Okay, all right. Well, yeah, certainly EIA progress will be wrapping up the community consultation in sort of coming weeks. We hope that we'll be sort of seeing an EIA approval in coming months. That'll be sort of a very sort of key milestone. The outcomes of the EIA will then sort of be fed into the DFS, and we'd like to be sort of moving forward to the sort of conclusion of the DFS by the end of the year. We'll be looking at probably the award of exploration licenses in Portugal later this year. We'll be looking to participate in the lithium tender that's going to be issued by the sort of the Portuguese government, and there'll probably be news around sort of further offtake agreements as well. So we'll be sort of filling out our sales book and hopefully not selling more than what we will be able to produce. So news filled.
Okay, in terms of the EIA, we've had several questions about the negative press you've been receiving in Portugal. There's been some opposition to environmental aspects of the project. It was on the SAV bulletin board on London South East yesterday. Is this something which might get in the way of the EIA, do you think? Is this something you're concerned about?
Well, I think there'll be opposition to virtually anything you want to do, whether you want to renovate your house. The neighbours will no doubt complain, whether it's a shopping centre or a mine. So yeah, we're hardly sort of surprised. I think the key thing is that it really has to also be seen in sort of context. We see the opposition really coming from a small activist cell. We contrast that with, literally the hundreds and hundreds and hundreds of job applications that are sort of pouring in. And when you think that, there'll be 200 people directly employed in our mine, assuming each one of those persons has, say, 3 family members, that's 3 times 200, that's 600, that's 600 people, who might be sort of benefiting from it. So, and that's, without the indirect jobs as well. I mean, it's going to be, just transformational for this region. It'll provide a lot of opportunity. We've got a benefit sharing plan that we'll be endowing with €500,000 per annum. A lot of that money will go directly into the community. And we feel that we've sort of presented highly sort of professional environmental impact document, and I'd encourage anyone who's concerned to just read the document, and you can sort of see that we've designed something that is responsible, sustainable, and we're sort of really looking to do the right thing by the local community and future generations. Apart from sort of producing lithium that will help really the globe sort of deal with global warming and indeed air quality in towns and cities. People do forget that electric vehicles don't belch out particulates, and if anyone's got young children, I think that's the last thing they want is sort of diesel particulates being sort of generated in their streets outside their bedroom windows.
Okay, we've had lots of questions flooding in for you. Antonio Murao, apologies if I've got your name wrong. I would like to ask you if it'll be possible to have new mining projects without the rest of the value chain added. He's basically saying, will the value add projects end up in Portugal? Will it end up in Germany, as you were mentioning? If you could discuss that and put a little bit of context in there for Antonio, please.
Sure. Well, I think the fact that we've got Europe's largest and most significant spodumene lithium resource, probably means that Portugal would be a pretty sensible place to build a conversion plant to sort of convert the material into hydroxide. So I think there's a terrific opportunity for Portugal to, be an early mover in the development of the sort of sort of top end of the value chain in Portugal. So a great opportunity. Certainly there are other proposed developments in Europe. We're certainly aware of one in Germany, another one in Poland, one in Finland. And really spodumene lithium will be the core sort of centerpiece to supply Europe's lithium requirement, because spodumene lithium is the most internationally sort of traded lithium raw material. So Europe's requirement will not be able to be sort of satisfied by indigenous production. Material will have to come in from West Africa, Brazil, Canada, Australia. So but spodumene lithium will be the key mineral.
What about, Alex Rees asked, what about plans for possible future expansion of the business if the EV thematic plays out as hoped? There's a positive question for you.
Yeah, no, I think he's spot on. I think there's some great opportunities. Portugal remains highly prospective. I believe that there are multiple Mina de Barrosos yet to be found by the exploration community. So, I think Portugal can very much become Europe's sort of conventional raw material hub. I think Spain also has its own potential. So, certainly the Portuguese government and the Spanish government are very alive to the opportunity, and they remain highly supportive of the development of the industry. That will be sort of galvanised by domestic production in those two countries.
Okay, Phil Pinto and one other ask similar questions about the share price. They're both shareholders. The concern the share price is below the recent placing and dropping each day. Discuss what are the near-term catalysts to improve, says Phil?
Well, so clearly the EIA award, I think that would be very welcomed, I think, and I think that'd be reflected in the sort of share price. I think sort of further offtakes, I think, will sort of only sort of highlight the strategic importance of sort of the resource. I think that would be sort of value adding. So I think there's sort of probably the two key sort of very near-term catalysts.
Great, and that was a nice short answer. Well done. One last question. This is the second time we've had you on here. We're delighted to have you back. We've never discussed Mozambique. You've got a major project at the Mutamba Heavy Mineral Sands project in Mozambique, being developed with Rio Tinto. Where is that? Give us a brief summary of that.
Yeah, sure. Well, it's certainly one of the largest undeveloped mineral sands deposits in the world. The good news is that mineral sands prices are increasing at the moment. We've got a joint venture with a global major. I don't think it's probably getting as much love in our share price as it probably deserves. So, we're certainly looking at, what we can do to effectively sort of separate it from the mothership and sort of highlight the value in that way.
Is the project actually currently being developed, or what's the state of play?
Yeah, so we're doing a pre-feasibility study at the moment. So we're sort of we're particularly sort of focused on some of the sort of baseline environmental studies that are required around that. We're doing some sort of further financial analysis, and we're sort of looking at a series of development options around that. So work is actively underway at the moment. But what we really want to do is sort of very much sort of focus on lithium and our European assets. We think it's a little bit sort of confusing to have sort of a focus on Europe plus something in Southern Africa.
Okay, David Archer, it's been fantastic to have you back. Thank you so much.